Hey folks, Dan Frio here with your market report for February 8th, 2024. So in today's news, we have the jobs report where how many people actually filed first-time claims, how many people are continuing to file claims. That's one piece of the puzzle, because the reason why we monitor that is because the Federal Reserve continues to say the job market is really strong, so we don't need to cut rates. However, on the other reflection of this, we're going to look at inventories, okay? Why do we look at inventories? And I'm not talking about housing inventories. I'm just talking about inventories of stuff that you and I buy. It's growing. Why is that a concern? Well, it helps the inflation front. Now, let me explain how. If a manufacturer or a retailer has too much of something, how are they going to get rid of it? Well, you and I love when they start clearance sales and sales. So they're probably going to put those items on discount sale. So what does that mean? Well, that's going to bring down some of the inflation numbers right there. So do we really, or should we really be worried about inflation? Well, that's our headline for today. We have Fed member Kashkari. He came out yesterday and he did an interview with Becky Quick on CNBC. And I want you guys to take a look at it, because he came out and said something about inflation that I don't think the market's really, maybe they really didn't hear, or maybe they didn't understand. Because when I heard this, I'm like, okay, we're there. And if you're confused, let me get to that video. We're going to start out the morning by this. So let's let Becky take over this and pay attention. Let me know what you guys think. So let's get to it.
What would it take for you to think that rate cuts would be acceptable come May? What kind of data would you need to see leading up to that?
Well, I think it's similar to what the chairman said on his 60 Minutes interview, which is we're not looking for better inflation data. We're just looking for additional inflation data that is also at around this 2% level. On a 6-month basis and 3-month basis, inflation is already back roughly to our 2% target. If we get to see a few more months of that data, I think that'll give us a lot of confidence that we are well on our way back to 2%. And then, of course, the other side of our dual mandate is.
So there it is. So he's saying, and I've been saying this for the last 2, 3, 4 months, inflation, once the housing data and a lot of the other data gets caught up with what the Federal Reserve monitors, we're there. We're at the 2% level, and he just said it. So the markets, I don't think they really heard that. Maybe they didn't digest it, because the markets would have skyrocketed. Didn't. And mortgage rates didn't ease off, because if we go over where mortgage rates are today, here's the top 6 products people use when they're buying their first house. Okay, you can notice that yesterday they were down 0.01, basically nothing. Okay, so that's what's going on with these rates. So if you want to know what these rates consist of, are they my rates? No, they're not my rates. Are they Citibank's rates, Bank of America? No, they're not any specific bank's rates. What happens here is Mortgage News Daily, they survey lenders all over the country every day, and they ask them 5 questions. 5 questions are, if you had somebody looking to buy their first house, home buyer, looking to buy it, it's a primary home, meaning they're going to live there, and it's a single family home. You get that part of it. You might be saying, yeah, that's me, so that's my rate. No, that's not your rate. There's some changes to these numbers. Those changes are these people that are getting this rate here, they have a 780 credit score and they're putting down 25%. So you don't need to do that. Most of our buyers are putting down 3%. And most of them probably have a 650, 660 credit score. So if you're out there and you're like, okay, Dan, that wasn't my scenario, what can I qualify for? I'll give you all my information at the end of this video so you can reach out to me, because my name is Dan Frio. I do this report on a daily basis. I'm a mortgage advisor licensed in all 50 states as well as Puerto Rico. I would love to help you. So without further ado, let's get over to the next piece of the puzzle that we have for today. Let's go over to the economic calendar. And all we really have so far out today is initial jobless claim. Okay, so it might be better if we go to this calendar right here. You can see it a little bit better. For some reason, Bloomberg's down today like it was yesterday. But if we go over the jobless claims numbers that we see right here, previous reading was 224,000 people filed for first-time initial jobless claim. Okay, that was revised to 227. It always usually gets revised up a little bit. All right, the forecast was for 220. It actually came in at 218. So I'm not really that fretted about this, if fretted is a word, because this is usually going to get revised up a little bit. So not really any cracks there that we've noticed. Then continued claims, they're basically just staying flat right through. Okay, so the inventories are coming out soon. Then previously the reading was negative 0.4. It's supposed to go up 0.4. So we're going to see how that comes in. So remember, if the inventory of this stuff starts going up and up and up, it's just kind of like housing. How do you get rid of this stuff? Well, you got to reduce the prices. And if you noticed over the last week, we had 2 huge special guests this week, Jaspreet and Mike from yesterday from Altos. Both of them said There is nothing in the cards right now that should cause interest rates to really spike and housing prices to crash. Okay, so that's the big agenda that we wanted to really get through to everybody this week with those two special guests. It kind of summarized my whole, forecast for this year, which hopefully you guys understand it by now, what my forecast is. If not, I'll be coming out tomorrow. I'm going to lay this all out for you, just going over the housing sector, interest rates, and some other things or pieces of the market. So stay tuned for that. In the news so far, again, let's go over to the stock market, see what the stock market's doing right now. Now, some big news in the stock market that I want you guys to focus in on is here's what we talk about. Remember, I always say, I've been saying the Federal Reserve, maybe they don't need to cut rates because people just keep spending and spending and spending. So think of it as if you own a shop that you're selling stuff, okay? And you keep selling it and selling more and more and more. And then people are saying, okay, things are getting way too expensive. People need to start cutting prices. But you're like, well, my sales are still going up and up and up. So do I really need to cut prices? No. Once these things start to retract, then I might have to cut my prices like inventory. But let's look at just some of the earnings that came out today. ARM shares soared after reporting stronger earnings forecast. Okay, stronger earnings. How's that happen? Well, people keep buying this. Okay, Disney earnings pop 7% on great earnings. You go down through here, oil prices are rising. So this is going to cause higher and higher inflation. And good news for that piece of the thing. But you start seeing under our shares jump as profits rise. So you get my point. We just had 3 huge companies send out their earnings reports just today, or they reported last night after the bell, all of them with huge earnings. Okay, so again, why should the Federal Reserve cut rates in a market where people continue to spend and spend and spend? That is coming to an end based on a lot of the debt that people are carrying right now. That's at basically a historic high. This is going to start biting people in the ass eventually, but time is going to tell. So let's see how the markets are reacting to all this, what we do on my daily basis, so you guys understand. Because I'm a mortgage advisor, I pay attention to what the heck's going on with mortgage rates. How do I do that? I don't really follow the Fed because they don't determine mortgage rates. I don't follow the 10-year Treasury right through here because that really doesn't determine mortgage rates. What does? Well, a bond that trades on Wall Street that's right here. It's called the MBS. What does that stand for? A mortgage-backed security. Okay, so what that does, what you need to pay attention here is right through here, what the price of that bond is doing. So all you need to know is this, just to make it as simple as I can. I'll make economics as simple. If the price is going down, like you're seeing right here on the mortgage bond, that means yields are going up. Okay, there's a yin-yang, a flip-flop effect. So if the price is going down, rates are going up. The price is going up, rates are coming down. If we go back to, let's just go back about 3 months, you're gonna see we were down right through here. That's when rates were 8%. Basically, we rallied way up to the top. That pushed rates down to about 6.25. We've been just gradually moving up and up and up over the last 30 days to where rates are just teetering on the 7% rates that we're having now. But like I said, if you're out there looking to maybe see if you qualify for your first house, maybe you're looking at a second home or investment property, how can we help you? Well, go to my website. It's rateupdate.com. There's multiple ways to either put in an application with us or reach out to us so we can answer any and all questions that you have. Okay, because before you first start, we'd love to have a consultation with you to walk through any questions you have, maybe some issues that you might think propose, maybe even your income and your job status. So how do you do that? Well, you can click the Apply Now button. That's the first way to do it. We do something a little unique. We ask you a few questions, and then we set you up with a consultation with a licensed mortgage advisor in your area. But if you want to reach out to us directly when you're on the rateupdate.com, now that's our website, scroll down and you're going to find a bunch of information here. Tell us about yourself, choose a plan, get your loan. You're going to go down through here, see some other blogs that are really informative. You're going to see a multitude of mortgage calculators. And then when you get to the bottom, you're going to see this right through here. It's going to give you our 800 number, which is kind of unique, 844-775-LOAN. Okay, 844-775-LOAN, or you can email me directly at therateupdate.com. So thanks so much for watching, guys. God bless. If you got any questions, reach out to us. We'd love it. Have a great day. Tomorrow.